Welcome back, everybody. This is going to be the last episode of this series. It was a great tax conference. I hope all this has been useful. Today we're going to cover things like cryptocurrencies. We're going to cover sales tax and use tax and other state tax issues, huge issue nowadays, buying the equipment, the importance of timing, and then probably cover a little bit about the IRS portal that will be very helpful to you potentially, and a few other things. So with that, go ahead and get started. Okay, a huge topic that we covered a lot on the last day were state tax issues. And it's a lot bigger than most people realize, and it's getting bigger and bigger every year and becoming more and more complex. But not only for businesses, it's also important for individuals because as we buy more and more things online, we're subject to use tax. So for instance, if you live, we'll just say Missouri and Kansas, since that's most of my clients, and you were to buy something from California and have it shipped in, you owe use tax to the state once you cross certain thresholds, and it's not that high of a number. So it's something you really want to pay attention to and start thinking about. They're really not cracking down on that as much yet, but I think it's coming. In some ways it's helped because Amazon has started collecting sales tax. And so from the buyer perspective, I think some of this is going to get resolved on its own. But still, when you know that is a real thing, for instance, in Missouri, I believe if you buy more than $2,000 a year, which I said is not that much, you're subject to use tax and required to file a form and remit that tax to the state annually. But what's even bigger is for businesses, because now there are two different ways of looking at how sales tax is collected. We know about, most of us do, about shipping product. But what about when services are rendered? And the thing is, what they're moving away from is where the work is done to where the benefit is received. And at first that doesn't seem like a big deal, but what if you were to, for instance me, prepare a tax return for someone who lives in, let's say, California, which is one of the states that have this, or Alabama, or Georgia. There's a whole list of states that now look at it this way. The benefit was received in that state. So what that means is if you're doing work in your home location, but the benefit is received in a different location, you could be subject to sales tax in that other state. It's also happening a lot more now as we hire remote employees. That remote employee is doing work for you in another state. And unfortunately, the rules aren't across the board the same. There's different thresholds and every state has to be looked at. So this is a short video. We're just trying to cover a lot of things. But I want to make you aware of that because if these are the kind of things that your business is involved in, we need to take a look and see if you have a liability out there that you aren't even aware of. And it could come back to bite you and you didn't even know you were doing anything wrong. So that's all I want to cover on that. But if that's you, think about it, let me know, and we can talk more in detail. Okay, another thing that happens this time of year, especially for business owners, is you're going to go out and you're going to try to buy a new piece of equipment, right? Because you had a good year, you want to lower your taxes, but especially this year with the supply chain issues, you order that new truck or that new piece of equipment and it's delayed and back ordered. The thing is, you want to know this, if it's not put in service before 12/31, well, by 12/31, it's not deductible. So if you order that new Bobcat or buy a new truck and you don't get it till January the 1st or the 10th or the 15th or February or March, but you paid for it this year, it doesn't matter you paid for it this year. It wasn't in service. And I really want to make sure people are aware of that, especially this year. Just because you went and spent the money doesn't mean we get to deduct it. And I don't want you getting mad when it's tax time and finding out that that $100,000 piece of equipment you just bought is not going to be deductible this year. So hopefully that's clear. Be very, very careful when you're making these deals to make sure you can actually take delivery. We talked a little bit about 1031 exchanges. Those are pretty complex beyond the scope of this video. I just want you guys to know that you can exchange one piece of property for another. We're talking like houses, buildings, apartments, land, things like that. Crypto, while it is considered property for tax purposes, does not qualify for 1031. And I really want to just bring that out because you may run into a video or somebody who told you that it was, but IRS ruled on that back in 2017. So since then, the ability to do a like-kind exchange does not exist. So I don't want you to get tripped up on that with cryptos, and we'll talk a little bit more about that here in a minute. Okay, the other day we talked about the child tax credit and the stimulus payments and how the IRS is going to be sending out letters. I got information that those letters are going to be available, so they hope by the end of January. But there's a couple things there I want to talk about. One, it's individual. So what that means is if you're married, there's going to be one letter for you and one letter for your spouse. They are going to be separate letters. So it's going to be very important that you get both letters so that when we prepare the tax return, we have all the information. One letter alone is not going to be enough. We're going to need both letters. And the other thing is I told you a little bit about being able to use the IRS portal. And I think that's going to be very, very important going forward that you have access to that. Unfortunately, though, just got word that they don't know for sure if the information on the child tax credit, the stimulus payments, is going to be in the portal in time for us to use them. So don't use that as a crutch and forget about those letters. Let's make sure we have those letters. You save them just like you would a W-2, K-1, 1099s, all that. Make sure you keep those. And then we'll also try to help you guys get the portal set up. I've been told they've updated their system and the ability to set it up is going to be easier, because remember last year, those of you who did it, the authentication process didn't work the best. And supposedly they're fixing that, and now it's going to be a lot easier. So we'll probably go over that again here in December and show you guys how to use that. It may help on some of these things. Okay, the last thing is, and I don't want to spend a lot of this because it's a big subject, but on cryptocurrencies, I just want you to know that those of you who are mining, and we're going to have clients like that, people don't realize how big it's gotten now, but we're going to have those that are mining. When you mine, when you actually get that coin, it's going to be taxable income to you on that day as ordinary income, and we're going to need to keep up. But also there are those of you who are getting paid in cryptos, and it's going to be an important topic to keep track of that, because when you get paid, it's income at fair market value, but then we're also going to have to track for purposes of tax. As a general rule, most are using FIFO, but there's more to that. We could do a whole video on that, and I plan on it, but I want you to know that it's going to be a big deal. The IRS is watching it, and you need to make sure that you're keeping your records up to date, because it could have a big impact on your taxes. And I also want you to know that not all the exchanges are giving out the best reporting. So you're going to want to look for maybe a plugin to help convert that so that you'll be able to do your tax basis. Like I said, that's a whole nother video, but I just want you to start thinking about these things while we still have time to get it done. I think that's it. We've talked a lot this week. I don't want to wear you guys out. I'm worn out. I tell you, 4 days of taxes, that's a lot of taxes. So hopefully that's enough. Hopefully it's beneficial. If there's any topics you'd like me to add to the list over the next couple of days, it would be useful to you. Let me know. I'm not saying I can do all of them, but we'll do our best. And like I said, let's get to planning.